Good morning everyone, welcome to the Wavy Tunnel Pro Market Outlook for April the 8th, 2026. I started this recording a little bit earlier, but I lost my internet connection, so I'm starting again. For the purposes of the presentation, please read this disclaimer before we start, that the presentation is for educational purposes only. Past performance does not equal future results. Please do not construe any information found here as advice or recommendation of any kind. So when I highlight what we're doing here today, take what we've done, put it into a demo, have a little look at it, see if the levels set up as they should, see if Wavy Tunnel gets you into the trade, and then you go from there. Right, so what have we got on the economic front? Mortgage applications, not really going to be a factor for us just at this point in time. The 930 oil stocks will be impactful because we will see to what extent the reserves have been drawn down. So these won't be going up, they will be going down. So there will be no surprises there other than to what extent they've gone down. And then we've got the Fed minutes, which is probably going to be a welcome distraction from the Middle East rhetoric that we've had over the last couple of months. And on that, you will notice now that there's been a marked increase in volatility. And let's have a look and see what the impacts of that have been overnight. Obviously, there's a 2-week ceasefire, which means we get a reprieve, which means equities have rebounded, the dollar has weakened, and the markets have breathed a sigh of relief. So what have we got in store for us today? On the euro, we can see that we have now broken above the wave and the tunnel, and we could possibly extend into this 118 area, and I would be looking at this high here. So 118.65 to 119.25. The ranges have to be wider because of the increasing volatility that we are experiencing and going to continue to experience for the next 2 weeks until things settle down. So we have the possibility here that this area in the 115.75 to 116 will be our support area. This will be major resistance, and then initial resistance around 18.5. So those are the numbers on the daily chart. On the 4-hourly chart, I had fibbed this first initial move because I'll always tell you that there's a 90% probability of this level hitting, and which it achieved overnight. So now this becomes our decision point, 117. We've got the wave that is trying to cross the tunnel at let's call it 116. So 116, 117 is our more narrow range. The bungees have now extended to the top. You can see the indecision here. You've got on the 4-hour, you've got 4 wicks. So this area up here has to talk to us. I would be inclined to think that today we are going to see a retracement of some description. There might be an initial bounce in everything again this morning as US markets open and everybody gets to get those long trades on because people love buying the dips. So let's go to the hourly, and this sets it out a little bit better. I talked about when we stretch away too far from the wave and the tunnel, you don't want to get too far out to sea when you go surfing or go swimming because the currents up there become a little bit turbulent. So you want to come back to the safety of the Wavy Tunnel system. So I would be looking for levels around 116, 115.75 in the lower time frames for possible buys, for extensions back to 117, and then to achieve this target up here at close to 118. So the markets will tell us in due course what is going to happen. Here we can see it on the 15-minute. Let's go into the 5-minute chart. So you can see now we've gone sideways now as the market waits for the US to come in to see what they're going to do with it. US like buying it, so nothing to do in that zone. Nothing at all. We just leave the market alone, we allow it to play out, and we will just look for setups at the levels that I have suggested, which are closer to a possible move into this zone here, which we had mentioned earlier. This 116, which will then coincide with the higher time frame tunnel. You've got a fill the gap trade that could extend in here, and then we could go, let me put it into 15 minutes, it's going to be a bit easier because I want to get rid of that. So what I would be looking at here, I'll measure from Royal to Royal. So 116 to 116 and a quarter is your first. You've got nice fill the gap trade and a possible extension repainting of this Royal up here. So those are the levels that I would be watching in the euro. So strong move up today. No man's land here. Wait for a better retracement, and then we can. This will be your decision point around this 116 area. So that's the area I would watch in the euro. Let's see what we've got in sterling. The song will be the same. Dollar weakness, currency strength, nice strong candle. What you can also notice is when you see a candle pattern like this, always look to the left to see how it behaves. Look to the left to see how it behaves. Measure the types of corrections that we get on these. So when you've got your first one down there, you know, what you want to do is to see, what do? We have 38.2% retracement. We, just start looking at the charts and looking for consistent behavior within patterns. This is a bit of a flat, so that means that at this level here is a decision point. So let's call it 135 for a round number. We can also see there's a lot of congestion in that 135 area. So we might stutter and stall here. We might then come back down to 133. So 133, 135 are our numbers to begin with on sterling. Let's keep going. So now we can see strong resistance up here. So now you've got a number, 134.62. So we have got the wave that is going to try and come up to the tunnel. So now we've got 134.5, 135.5, call it. So I would be watching those waves. We might get, like I said this morning, on initial American market open, that the overnight move continues because of the, everyone's can undo that tight seat belt and just breathe for a couple of minutes and get back to business as we knew it. Buying the dips, selling the dollar, buying currencies, and off we go again. So here we go. We've extended too far. We've achieved our target on the hourly. There it is, 270. So what we are doing now is let's have a look and see what happened overnight. Let's just measure that move from that low to that high. And we can see that if we get back into this zone, which we always prefer, which is in this zone here, coincides. So now we can see 32.5 is a number. We know that this area up here is going to struggle. So even if we break above here, I don't think that we are going to extend too far. So from a selling perspective, I would look around 135.25. For a buying perspective, I would look around initially 133.25 and then 132.75 area. Again, this is stretched away too far. It'll want to come back. It'll want to come back. It'll want to come back. So even if we get a 50% retracement, so 133.25, this will then give us some sort of insight into the next move. Let me see if I can move that. And there it is there. And there it is there. So that would be the first area I would be looking for support, 133.25-ish, for an extension up to 135. So that's your first area of possible support. Again, you can see we've stretched away too far. Wave is trying to catch up. This is why the market goes into defensive mode and wait and see mode. So nothing to do in there. Are we going to pull back any deeper? Are we going to either come back to the wave? So that will be your first point. Remember what I said about the 45-degree angle. So that gives your first observation to see. So a pull back down to 134.75-ish. Have a look to see if there's a possible buying opportunity. If not, you're going to get a fill the gap and back towards the tunnel, deeper retracement, and then for a continuation of this move higher. Nothing to do in there. So we are now waiting for either 133.25. I would still suggest above this level, you could look for sells. Closer to 135. So closer to 135, I would look for sells, and closer to 133, I would. The ranges have got to be wide. To narrow this down at this point in time is very difficult because of the volatility and the things that can come out of the market that could impact on trading today. So look around in this block, not too much to do. There are opportunities. Again, if you are a short-term scalper, the problem with short-term scalping in these markets, you get these announcements that come out and you get these big wicks. So you get explosive moves which can destroy your risk management policy that you have in place for yourself. Always remember you're trying to buy close to lows and sell close to highs, because your risk tolerance is very, very small, because you have, when you get caught in the middle in no man's land, your risk tolerance has to be greater and you lose too much money. So not worth it in my opinion. A quick look at yen to see how we're behaving at that 160 area, and they can breathe, because obviously the move down is now releasing a little bit of pressure, and so the market will be tracked between 157.5 and 160.5. That's your range. Nothing to do there. You've got a decision to make here. 45-degree. Are we going to go higher, or what are we going to do? You've got to, don't know. You can see now how we've been oscillating around the wave, and so the yen is a very difficult one to do, and that's why we always look at a cross-currency pair with it. It might suggest that the euro yen will come closer to 183.75, pull back into the wave and the tunnel, and off we go again. I think we've achieved our target, because if we fib this move here, There it is. You've achieved it. So you're probably looking for a deeper correction now in this, and a 50% retracement and a move back into this area here. So these are your two decision points, 185.5, 183.75 on euro yen. Right, let's have a look at the Canadian dollar. Everything you will see has obviously had a, just puffing out their chest now. Let breathe out. We get a stay of execution. What are we going to do? Swing high, swing low, strong move. What do we say about strong moves? 38.2% is the first point of contact. What is that? Higher time frame tunnel. Fill the gap trade that's going here. You can see the big divergence here between the bungees on this 4 hourly chart. This looks like you could probably look for sells around 139 and then for continuation into this 137.5 area. Very messy in here as well. So a lot of divergence, a lot of noise going on. Let's have a look and see what the hourly says. A little bit clearer, a little bit crisper. Everything's behaving and doing what it should do. And we are, again, you would have seen that would have been there. So I just want to measure this because I just want to see how, because I don't watch it. So their corrections like deeper. So my area here, just above that area, it's where it likes. And you can see again, it's achieved its objective. And what we might do now, let's just go in there and let's get rid of that and go there. So we can measure all of this and just get a cleaner picture. So the overnight move from there to there, and what we said is this likes to come back a little bit deeper than normal. So I would look at 139 in the Canadian dollar as a possible sell for a continuation lower. We could extend a little bit deeper because it looks like the Canadian dollar does like to extend its retracements a little bit further than 61.8 to 75. It does, so it could come back into this previous area of resistance. So 139.25. Again, these markets are not there to be brave at the moment. Find your setup, find your trade, make your money, switch off your system. This is interesting here. What am I seeing here? It's just a pattern that I observe. It's what you call a cup and saucer. So watch what this happens. So 138.90. So write that number down and then you can have a look to see whether this resistance area holds or it breaks. If it breaks, you're going to then potentially go, what's that, 139 to 138, let's call it 138 to 130, so about 75 basis points. So we could from there get up to the previous highs. So if we break above 139, we go back towards 139.50. If we hold this level, we're going to come back down to 138.27. So those are your numbers for the Canadian dollar. Always observing the wavy tunnel for your guidelines, and just to make sure that when you come into these pockets, and you're looking always for convergence of indicators. So wavy tunnel has a number of them: trend lines, tunnels, waves, trend lines, bungees, and then if you add a fib onto that, it just gives you, once you start ticking 3 or 4 getting 3 or 4 ticks, you get more confident with the trade and off you want to go and you want to trade it. So pre-market, you can see not too much yet, so we will continue. Let's have a look and see what the Aussie dollar has done overnight. Again, it also should have sparked a rally. Gold went higher as well, and the market is just breathing a sigh of relief. The market that was rolling over and trying to come lower a little bit deeper into this higher time frame tunnel and into this area here, it stalled, stuttered, and so now we have the market has to make a decision. What are we going to do around this the 70-50 area? So we would look for clarity in that. We have got, there we go, so 71.15, possible area of resistance. I can see that support is going to come in there. So that coincides now with the wave and the tunnel that are starting to look like they're going to give us an indication about continuation or breakout. Because if the market now comes back, the wave is going to stretch through the tunnel. This will get to a 45-degree angle, and we would probably go hunting for the upper royal. And then I would suggest that would be around the 71.16 area. So 69.5 possible entries for a long. Let's see what that looks like in the hourly. Same. We've got a possible fill the gap trade that could come in here. You've got a move here that, let's measure from there and just get a guideline. Sometimes I jump in, so don't always follow what I do unless I go from swing low to swing high on the fibs. I just look for confluence of, and again, so I like this area a lot more because all my Fibonacci retracement numbers are in there. The wave is in there, the tunnel is in there, the fill the gap is in there. So I'm liking this as an area of support around 69.40 for a continuation back to the highs and see if we can extend up to 71 and a quarter. Right, so let's now move on to the indices and the futures. Excuse me. And let's go and have a look, and we can see what's happened overnight in those. And there we go. Template, load. Now we just need to put a bit more data in it. And let's do 720 days and off we go. There we go. So, big bounce overnight. There we go. Coming to a trend line, 25,200. So we've had a big move up. If we measure this move down on our retracement, we realized that this was struggling to break lower. I've mentioned before that in where we were in the potential outcome of what was going on in the Middle East, it could have been so deadly, but the market didn't really capitulate. It was grinding lower. You know, the VIX was over 30, but it wasn't really. I mean, it's down to 20 today. You know, it's down. 25%. It's quite dramatic. It's from the overnight highs. So 25,390, 25,739, and 20. So you know, you'll start getting used to the way I do this. And the levels that I'm looking at. And so let's go and have a look at the 4 hour. we need to correct again. So what's happened? Wave, tunnel. So now we've got a level on the downside, 24,462. So that becomes support. Are we going to extend into the 400s, 500s and 600s? Don't know, but I think we need a pullback. So the first pullback I would be looking at is 24,885 to see where we get to. So that doesn't even, again, just for the sake of telling you how, when you use the Fibonacci tool, how you achieve your objectives. And it's very, very worthwhile. So what we'll do with this one is we'll just measure the overnight move, just to dumb it down a little bit. And we can see where the wave is, we can see where the tunnel is. I don't think we will get this deeper correction unless something really dramatic comes out of the Middle East. So 25,600 is my number on the top, and I would suggest anything in this 24,926 to 755 is going to give us an area of support. No point in going any lower, because if you go lower, you just see the volatility. I think there's a gap in the market, obviously, with the news overnight that would have caused a gap. Markets don't like gaps, we all know that. And so, but I don't think this gap is going to be filled today or tomorrow, but sometime in the next few weeks, there's a possibility. We can also see, what do we see here? First impulse higher, spike, bunges at the top. What's going on here? Massive divergence. But sentiment and divergence don't always correlate. Market has got tired of selling rallies, and they will want to be buying dips today, and they're all going to get a little bit enthusiastic this morning when they come in, and they're going to start buying. So let's go, but there will be a buy the dip philosophy in equities today, because people will go, thank goodness for that, we can get back off to the races. Here we go in the S&P. So in the S&P, we can now see this previous area of resistance, which is going to turn into support, which is at 67. So there's your bottom line. You've also then got a breakout level that I was watching yesterday, which was 67, 75, 85 area. So that's your first area of support. So write those numbers down. And then we could extend, we will have achieved what we wanted to achieve on a fib basis, because there is first move down, correction, bang. So we could extend into the 69.50 area. I don't think so, not without a correction. And so I would have a look at that area. 68.85 would be a better number for me that I would be looking at on the S&P. Let's just do this. So on the 60 minutes, let's go down into the 15 minute, beg your pardon. And let's get rid of the drawing. So let's have a look. So we can see, you see how we stretched away from the wave and the tunnel. And so this consolidation that we're experiencing now allows everything to catch up. Will we get a correction this morning? Yes, we will. At what point? Because they're probably going to come out. They're going to do one or two things on the open. They're going to go, let's see where the buyers are and try and sell it off and try and find the buyers, and then they get comfort and they've got a number. Or they are going to go straight out of the blocks, buy this up, and it should stop at 68.85, and then we probably get a bit of a deeper correction and a move back into 68. So I would watch 68, I would watch 68, 70, 80, below 68, I would watch 67.75, and below that, I would watch 67.55. So those are the areas that I would be watching. Bigger support area, obviously, down at 67. So that's a bigger number for you. Lastly, before we go, let's have a quick look at gold. No, we should look at oil as well. I won't go too far. I'll just go into the hourlies, because you will see the dramatic nature of the moves that we had. Strong up, flaggy. So here's your area of support in gold. Previous highs, broke above it. Now we're oscillating around this 48.10 area, and we will have to see what happens there. So we always want to fib on it. And if we did that first swing, 270. Right. Go to the next one. Where's your 270? So 5,000 is our target. This is our area of support where we on it right now at 48.10. Better support at 47.35, and even bigger at 46.80, and then eventually looking for a move back to 5,000. That all depends on what's going to happen in the next 2 weeks. So for the next couple of days, we're going to breathe a little bit easier. We're going to welcome the break in hostilities, and we are going to have some relief rallies. We're going to see some. So now let's have a look and see this measure here. So let's have a look. So first thing first, we had that swing low. We nearly retraced 100%. So this is an example of where the risk reward on a trade is, because you can sell close to the previous high, stop at a reasonable level above it, just to give it, allow it for that spike, because there'll be one of these above it as they try and wash out weak stops. The target for this impulse here, so while we stay below 118.71, the target on this is back into this zone here. It looks a long way off from here, but you know how quickly things can change. So I would expect for us at the moment, for today, we're going to measure this move here just to find some levels. So we are, again, so this one is the opposite. So we're in a fill the gap trade here. You see how the wave has held the support line. Here's your area of support here. Oops. While we maintain that level, we are, so here's all the levels. I won't go into too much lower time frames here, because I don't know to what extent people are going to be trading these, because it's too dangerous. So those are your numbers on. So we're targeting 85. And that's where this all got messy down here for that first sell-off. Here you can see that we were waiting for the decision on when there was going to be an execution of an invasion. That didn't come. We had 2 days, 3 days, 5 days. Now we've got 2 weeks. So I would say at the moment, all things being equal, everyone behaving like they should, that any retracements into 104, 107 are going to be sold, and we would try and get down to this 85-90 area. So that's what I see for the markets today. I hope that's been helpful. I hope you all have a good day, and any questions, shoot Jody an email and we will get them answered. Any other currency pairs or anything else you want me to have a look at, I'll gladly do that. But until tomorrow, I'll do another one tomorrow just to see how we played out today. Good luck today. See you later. Bye.